listening to the Daily Gold Podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy-Byrne.
Why are gold and silver correcting and trading well off their highs, yet inflation statistics are hitting multi-year highs? The market is a discounting mechanism. It looks forward, it anticipates, it discounts. The market usually focuses 6 to 9 months ahead of the news. Economic data and economic news, these are some of the worst lagging indicators for market action and market performance. Anyone who has followed markets for a considerable length of time can recall economic data being at its worst right when the stock market usually bottoms. The data in the COVID news was so negative for a while in and around the spring of 2020, but the market moved higher, and it continued as it anticipated the economic rebound that was coming. Market-based indicators of inflation have all peaked. Gold peaked in August 2020, 17 months ago. Silver as well, although right after that point, it had held up better than gold initially. The gold to silver ratio, an indicator of rising inflation if it is declining, bottomed at the end of January, 11 months ago. Then copper peaked in May, some 7 months ago. The US dollar put in a double bottom with the second low in May. Oil may have peaked in October. Do you get the picture? The market is telling us the rate of inflation has peaked. Economic statistics, which are lagging indicators, will reflect that over the coming months. In the same vein, gold and silver could bottom when the news looks the worst. Gold and silver are performing poorly because the market has already discounted, to some degree, the Fed taper and the Fed hiking interest rates. These things will result in higher real interest rates, which is bad for precious metals. But again, a good portion of this may have already been discounted because the market looks ahead. The market is signaling that the first rate hike will be in March or May. Fed funds futures today showed a 53% chance of a hike in March and a 67.5% chance of a hike in May. History reveals that gold and silver rebound strongly after the first rate hike in a new hike cycle. That is the coming catalyst for precious metals in 2022. It's not going to be inflation or a huge market meltdown, at least not in 2022. Thank you for listening.
Thank you for tuning into the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.